I am so excited to welcome back Peter Grandich to the show. We talked about 7 months ago. He made some great calls per usual. I think, Peter, you did correctly call the big uranium run-up. That surprised a lot of people. You were bullish then. Last time we talked 7 months ago, you were bullish on Camco. You were bullish on gold. Both great places to be. So really excited to have you back and hear what looks exciting to you now.
Thank you for having me. It's a pleasure to speak with you again.
Absolutely. So I guess just top of mind, what excites you the most going forward in terms of allocating your capital the best possible way?
Well, it's hard to be excited. There's a lot of fundamental issues that I think, both for the U.S. and the world, that are going to take their toll and make it difficult. The stock market, the U.S. stock market, really lived off of very cheap money and extremely low interest rates, and a country that literally ran up debt in the trillions. And so for a while that worked, but what came with it, we've seen the inflation, the Kool-Aid was taken away, and of course the market had a pretty bad year in 2022. I don't know if it would be as bad as that, but I don't think it can be very well to the upside either. Uh, the normal things that people know about the political, this is going to be the most dysfunctional Congress, I believe, because both parties not only don't talk to each other and try to work together, but within both parties they have fractions that think differently. So I don't see anything of real significance getting done, and that comes at a time when we have a real serious debt crisis. People know about that. I'm sure you've had other people on to speak about. That's not anything new, and people are starting to see how it impacts us. But the crisis to come, which I really think impacts people more, especially the working class, middle to lower class, and that is the coming retirement crisis. We have about 75% of Americans working paycheck to paycheck. So to put away for retirement is really difficult for them, especially now. When the inflation costs went up, they literally had to use credit cards in order just to get necessities. Talk to any food bank, they'll tell you no matter where they are in the country, many more people are showing up and working class people are showing up. But the real problem is going to be is how do these people save enough in order to retire in some sort of halfway way that they would want to, and they're not going to be able to. And people don't want to talk about that. When I talk about it, it turns people off and all, but it's a reality. Listen, even I'm going to be 67. I'm concerned that if I live into my 80s and 90s, I am not going to be able to have money or take care of myself and all of that. And so these are things that are on people's mind, and it's not yet taken into equation. And the government's going to be called upon to by these people that, hey, you got to help me at a time when it can't help itself. That's why they're talking already. The third rail was talking about cutting Social Security. If you were a politician, it was like putting your foot on the third rail if you talked about cutting Social Security. But now they openly, because they have to, and the next is Medicare and Medicaid. So this may not impact the market tomorrow or next month or even next year. But if you have any long-term lookout, you have to take this as one of the many difficulties that the country is going to face. And it doesn't bring you clients. Trust me, my business from my financial planning, even though, like you said, made some very good calls because they were negative. No, people rather buy the hope in the black box than the reality of the fundamentals.
Yeah, I think about this all the time actually, because we know the biggest generation in America, the baby boomers, are all trying to retire right now, and they all kind of have. Their 401ks were super inflated. And so that's what everyone was relying on. But then the market just tanked kind of last year or so. And I'm like, well, what's going to happen to all these people's retirement accounts? If they're relying on the stock market to go up. And if it doesn't, what happens? And you're kind of calling out how kind of we're in this rock and hard place with the Federal Reserve. We have stagflation. The government can't really print money in this environment that well because we do have sticky inflation, but we also have falling stock market. So it is a big mess. And I'm always like, what are all these baby boomers who've been relying on the stock market going to do? Like, it's kind of a big problem.
Well, Japan within 20 years will have one person working for every person that's supposed to be in retirement. It's unsustainable. But there's another factor that should be discussed. And because you're a very young man, look at me. But they're going to charge more out of your paycheck for Social Security and Medicare. That's one of the first things they're going to do besides raising the limit of when you can start collecting and all the other things that won't be great. But you're going to say one day, as a 30 or 35 or somebody out there, when they read about an 80-year-old man that Medicare is going to spend several hundred thousand giving him a new lung, a new heart, they're going to say, wait a minute, I'm being charged to death. This guy's lived a life, blah, blah, blah. So there's going to be a war, not only, and I don't say war of shooting bombs, but there's going to be a battle of not only of income levels of people, but of the ages. And it's not going to be a pretty picture. And where do you draw the line? When do you say, we just can't afford that? That's going to be, and it'll all be decided by who gets the power and gets enough politicians to vote one way or another. So I think one of the surprises over the next 5 to 10 years, you have these futurists that look out. I don't know if they discuss this, is how politically connected is the younger generation going to become to have influence? Because normally it's the older generation that has the influence because they have the money. So that's another thing that I think we have to look at coming down the road. And thank you for giving me a chance to say this. A lot of places don't want you to talk about that. And also, I'm glad you gave me that opportunity.
No, it's such an important thing because I've thought about it. My parents are retired and I know my fiance's parents are retired. Everyone's retiring and like their 401ks are down like 25% because a lot of the money managers have them in like tech stocks and Apple and things like that. And so it's a huge, huge issue. So I guess like the end game would be a welfare state where the government has to print money to pay for the healthcare costs, right? That's a huge, like you said, it's going to cost a fortune to fund kind of the longevity of the entire generation, right?
I don't think it's a coincidence. And I try to keep my faith out of secular discussions like ours, but I don't think it's a coincidence that the country is moving more to secularism and socialism because, in a way, that's when socialism starts to thrive. When it's that bad, you try to take it from the few that have it to supposedly distribute it to the many that don't have it. So I suspect, as much as people say the Republicans in Congress, whatever, but I think the country will continue with a tilt towards more socialism and secularism. And with that, the real rich will always escape. They just have the means to, but the working class and what will be considered upper middle income or whatever will be the most taxed because of this.
Yeah, and already I read a statistic where the majority of people making six figures, like $100,000 a year, are living paycheck to paycheck because inflation's so high already. And so they're just going to get hammered even more, right? The middle class, is that what you're saying, to fund everything that's going on?
Yeah, I mean, where do you get it from? You can't tax the poor. Their tax is the lottery. These poor souls try to win a lottery and don't realize they're really getting online for a tax. But separate from that, the real wealthy can do a lot of things. They can hide the money. There's all sorts of ways of legitimately. I'm not talking about just being dishonest. I'm talking about legitimately. They have ways, and then so it leaves the working class to foot the bill. And part of the other issue, and this ties into the border crisis and all of that, is there are more people in the wagon now versus how many pull it, meaning people that are dependent on others. And eventually the people that are pulling go, I want to get in the wagon too, you know? And so it doesn't bode well for, in my argument, for anybody that's looking out past the next year or two. And I think unless you're 70 or 80 years old, you have to. You have yourself, you have another 40, 50 years, hopefully, for your life. And I don't see it. And it's not just here in the US. This is going to be in Canada. This is going to be in Japan and other places too. So it's a universal problem, not just one for the United States.
Right. So this is kind of a pattern that seems to repeat itself. You have these big countries just getting overextended, over levered, too much debt. And so where does it all resolve? Do they debase their currency like crazy? Do we enter a severe depression? Like, kind of what do these governments end up doing? Because we've seen empires crumbling and just kind of getting overextended before. So
I think it's all of the above. I mean, it is possible for all of the above. And that, by the way, has caused me personal stress because I foresee it. I don't want to be a prophet about it because there's no money in it. Trust me, people don't want to hear this. They, we have a planning group and we try to teach the people that come that cash flows is more important than chasing net worth. Try to be efficient with what you have, and you can't turn a Chevy into a Rolls Royce. People could promise that, talk about wonderful things. There was a lady out there on Wall Street. We don't have to mention her. 2 years ago, she said anything about a technology stock. They went from $5 to $200. Well, they went from 200 back down to 20. Now they might have rebounded recently because the market was so beaten down in the Nasdaq, but those things are never going to see their highs again. And the cryptocurrency, you remember how negative I was? That's money lost forever. And unfortunately, it impacted the junior resource market because some of that money would have went to speculative stuff. But all these things, these are things are not what people want to hear. Even those that engage me, they'll say this to me. This is what they say: Pete, I know you're right, but I hope you're wrong. And that's where we're at.
So I guess, this is a show for long-term investors. We're trying to get as much upside as possible. So what are you thinking could weather this coming storm?
Well, there's one area because it can't get done unless I'm right about what I'm about to say. So the world is moving in a very big way to green. Electrical cars, electrical this. Uh, One, so that they're learning now the nuclear energy just has to be part. You can't get all this increased demand for energy. Our grid system is poor. 20 years ago, if you went to a politician in any state said, I want to build a nuclear plant, they say, are you crazy? We're never going to build a nuclear plant again. Now they're begging to have it. So nuclear energy has turned and turned for the better, like you said. The big gains were made. Now it'd be more of a grind up for those type of companies that to be successful there. But for all this green, you need minerals, both regular minerals, copper, cobalt, lithium, and what really people don't realize, you also need these rare minerals, these crazy names that are hard to pronounce and all. China basically has a lock on that, or areas of the world which aren't exactly favorable to us. So we're going now. We've gone full tilt here in the U.S. All the governments are putting out electrical cars and electrical this and turbines and all this stuff and all. But the supply to build these things to the level that they expect is not out there. Miners have not spent a lot of money the last 10 or 15 years developing and finding all sorts of new ore all around the world. In fact, I like to point this out, and this is very, very important. When I was in the metals market 30 years ago, even 20 years ago, you could spin the globe, point your finger, land on a country, and go, yeah, we can go there. That's not the case anymore. We're seeing lots of trouble for mining in South America and other areas from political issues, financial issues, strife from workers. Recently in Panama, they decided to suddenly just raise a royalty up to 20%. So mining companies have been very prudent now on where they're going to look. And so there's not as much potential places to go as there once were, unless you want to take a lot of risk. So a commodities boom, irregardless of what other than a worldwide depression, is likely to happen because these metals are in short supply and need to be found more. And remember, even if you find it tomorrow, it's 10 or 15 years probably before it comes out of the ground and is used. So I think if you're going to believe in this green movement, which a lot of people have bought into, you're going to have to realize that certain metals are going to be more in demand. And those that look for it doesn't mean they're all going to find it. Failure is the norm in the junior resource market. Trust me, I learned that last year. The bottom line is that's one area, and the nuclear, that's hard to believe can't do well over time.
Okay, so you're looking at obvious necessities and just investing in what people are going to need and that are currently just scarce. It makes sense, right? You're just looking at the supply demand fundamentals saying we're going to need it. So prices are going to have to go up eventually, right?
Yeah, things like some people looked at certain types of commercial real estate, depending where they are not going to be do as well as they once did because the COVID helped change the workplace. There are now many people permanently working from home or spending a lot of time working from home, and companies don't have a problem with that. So just buying office space, so to speak, anywhere and throwing a dart, you have to be more careful in that. Sizes of homes are coming down. The younger generation is not going to or be able to afford the 6,000, 8,000 square foot home. The very wealthy will, but the upper middle class that was buying that 10 or 15 years, the older we get, the more we want to shrink. The other thing that's obviously going to still do well, it's not an area I look at, but things that are medical, especially for an aging community, because there's still a lot of money being spent by people to sustain their lives and grow. So there's probably there's growth in that area. But I think it's very, very hard for the general equity market to perform as it has for a lot of years because the ingredients that helped it go while printing the money, interest rates going from 15% down to 0%, little or no inflation that we knew of or was reported, that's behind us. It can't come back in the environment we face. So at best, it's going to be a stock pickers market. You're not going to hope that the general stock market, and you made a very good point about the 401ks that are down. A lot of people lost money last year, but they've held on. They have the loss in their portfolio, but they didn't take it. And one of the reasons is the young, mostly young people who are giving them advice have grown up in a market that only goes up. So don't worry, it's going to come back. If it doesn't come back this year, even if it's flat to somewhere's down, and now a lot of those people that do the 4% rule, they sell a certain amount and then the market makes up for it. All those plans are going to be in big trouble. That's why I say that the traditional financial planning is a flawed process. And it's a flawed process because all you have to do is read the disclaimer. Most people don't read the disclaimer, but that's the issues they're going to face, like you talked about, your parents and other. What are they going to do with their 401k if there's another year of flat to down? Can they see themselves visioning more losses? So talk to me 10 months from now, and we may have a completely different picture of what people are doing versus what they're doing right now.
Yeah, and this leads back to kind of pretty much the only story that matters in the centrally planned economy. Will the Federal Reserve manipulate the market up or down? What can they do in this environment? Because everyone's just waiting on a word from the Fed. Will they go easy? Will they continue hiking? Which I guess the full extent of the devastation they're causing hasn't really been reflected in the stock market yet because things are just coming down. So what is your take on what they're going to do?
Well, they say, I don't say it, but people say it, that our economy is basically 70% consumer demand driven. 75% of people are working paycheck to paycheck. So they don't have a lot of discretionary income. They're even having difficulty putting food on the table and keeping shelter over their head. They have to even use credit cards for that. So it's very hard to see how earnings growth for a lot of consumer related products can continue. We just saw it in the last couple of days as you and I speak, some disappointing earnings by some of the big names, even the Apples in all of the world, the Amazons. Just think about how everybody thought of Amazon during the COVID, and now it had its biggest loss ever. So it's very hard. So even if the Fed supposedly here's what I don't think is going to happen. I don't think they're going to take their foot off the brake and slam it down on the gas pedal. They may get to the point where they ease their foot off and, but I don't think they're going to go back easing until things are really changed, if they're going to change. I don't think they're going to change to that level, but if they do, it's not going to happen anytime soon. And as you and I talked today, they put out an employment number, which is all smoke and mirrors because it's a lot of seasonal stuff and once in a lifetime stuff that they did. ADP had 100,000 employment. The payroll number has 7. I mean, the difference is in status. Somebody's got it real wrong, but employment is still tough for people. It's hard for people to get discretionary income right now. Wage price, wage costs has risen, but not to keep up with what real costs have been. So I just don't see how companies in general get an expanding of earnings. And the only other way they could do that is dramatic drop in interest rates. Don't see that going back to zero or anything like that because inflation's here to stay. So it's very hard to argue of a much higher stock market from where it is now. And there's always the chance that it can go substantially lower. I don't think we're going to get lower than the pandemic lows, but there are people that think it can, can crash and all that stuff. I think we're past the crash fear, but I still think it can go lower. And it's not how much you make in investing that separates you from the winners or losers. It's how much you don't lose. And it'd be very hard for people to eat 2 years worth of losses and not want to make a change.
Yeah, absolutely. So that's really interesting what you're saying because the market thinks that they're pricing in a soft landing, meaning that inflation's going to go down. The Federal Reserve can finally start to cut and go dovish, and therefore we can just kind of get out of this, and they can start bringing rates down to zero, and it'll just be a massive boom again once inflation comes down. But you don't think it will. I think it all depends on inflation.
Soft landings are really fairy tales, or it's a good thing to hope, but I can't tell you. I've been around this 40 years. I can't tell you how many times I heard, well, if there is a recession, it's going to be soft, and they don't end up soft. And this is very hard now because they're losing the tools that they have. We just can't keep printing trillions of dollars more. And the reason is this: we're supposed to be now close to 33 trillion. Let's just say interest rates go to 5% and they just stop there. That becomes the new norm. Well, that's like 1.6 trillion in interest expense. I mean, uh, I never thought we'd use the word T when I started in this thing, but we do. So the abilities to kick the can down the road, or provide the Kool-Aid that was provided for a lot of years, becoming very difficult, if not impossible now. And that's why I think the stock market really can't go anywhere as a whole substantially higher for as far out as my eyes can see, at least.
Wow. So you're kind of foreseeing many years of just kind of stagflation, kind of like the 70s where we were kind of stuck and it's not a good environment for any risk assets. I don't think anyone's expecting that. They're thinking 2023 is the year it all turns around because the soft landing happens. But if you're saying the opposite, then the market has it completely wrong and it's going to realize that and probably fall a lot more, right?
Individual companies within certain sectors will do well because they just do better than their competitors. But to expect all boats to be lifted, I think would be a wrong way to go about this.
Absolutely, which is why I'm happy to have you on because you're very generous with your advice and the companies, the specific companies that excite you. So, how are you kind of allocating capital to ride this out?
Well, as I told you earlier, it's mostly in the commodity sector.
Yeah.
So I've always been, wish I wasn't last year because cut my head off because I had my head handed to me last year. Even though being right on everything else, the junior resource market was clobbered and I was clobbered with it. And believe it or not, maybe other guests don't talk about their losses, but somebody has to lose, and I did last year. So I have a couple of themes. First, I use as an example a company called American Pacific Mining. And the reason I do is failure is the norm in the junior resource market. There are 10 honest, hardworking people going out to look for new minerals, but only one or two will go the whole 9 yards, find something, either sell it or make it into a mine. Doesn't mean anybody's dishonest in that, and doesn't mean in the interim something can go up. But failure is the norm. And the other mistake is we don't have a mental and financial preparedness for losses. We buy into the hope that comes with junior resource. But if you can get past those two, if you could understand that, one of the things that American Pacific did last year in a very tough market, it acquired a company that basically has put it in partnership with a private Japanese company that's building a mine in Alaska. And not only does it look like the mine will be built and go into production. And therefore, that's a company maker for them. But that property itself has tremendous exploration potential, and they have other exploration potentials. So I like the idea that American Pacific shouldn't go to zero or near zero. Okay, because it has a real asset now that should be and eventually produce cash flow for them, et cetera, et cetera. Doesn't mean it's going to go to the moon, but at least I'm not going to lose everything or close to everything. My other theme is there's going to be a tremendous mergers and acquisitions in the metals market and further down the food chain down to the junior resources even more. Now, some will be out of necessity. They're just not going to be able to survive unless they come together. It's very difficult now to be a junior resource company for a lot of reasons versus 10 or 20 years ago. But there's an area that I like especially to happen, and that's in Quebec. Now, these companies happen, they sponsor my blog, so I have a bias, but I believe mergers and acquisitions are going to take place. There are two companies there, Amex Exploration and Radisson Mining. Both are advancing their projects. Both are very attractive for an ongoing mergers and acquisition there. So if I'm right about it, those are two companies that could participate in that. A third company, Northern Superior, they're either the hunter or the huntee. They've actually done two acquisitions there, but I think they've seen, or I see what they've seen, that that's going to come and there's going to be a more unification there. So they could still prosper as doing more acquisitions there or be part of an acquisition themselves. And finally, in this tremendous ugly junior market we had last year, make no mistake about it, if you were in the junior resource market across the board, you had a bad year, as bad, if not worse, than the general stock market. But some things were driven to ridiculous lows. And there's a company called Big Ridge. They're going to have an updated resources. They have a million ounce plus deposit in Labrador. They have a 600,000 ounce deposit in Quebec. And recently they had an $8 million market cap. Doesn't make any sense. If we're right about the metals, if we're right about, they have to go up from there. That's the thinking that I have. Doesn't mean they have to because I said it. So these are companies, they're on my blog if you want to look at, but whatever you do in the junior resource market, please, if I can, this is the last interview I ever did, and anything that could be repeated to people that invest in juniors. Remember, failure is the norm. And remember, you have to be both mentally and financially prepared to lose capital. And if you can do that, then it's a very good place that can offer above average returns many times, especially if you're early in a move, which I still think, as much as we speak, the gold market's been whacked. We are still in an early stage of this gold, silver, copper, and other metals like that move. I think metal prices still have a lot further to go on the upside. May not be overnight, but they still have a lot of upside in them.
Yeah, it kind of seems like a perfect storm for silver and gold in this environment because people want to move to the safest possible asset. And that's generally what we see after big collapses is people moving into gold and silver. Like after the tech bubble collapse and the 2008 financial collapse, it was always like big rush in gold and silver. How about uranium though? Because you are bullish on that as well. Are you excited about any companies in particular?
Well, I always say, as you know, you have to own Cameco. That's the leader. There aren't a lot of producers that one can buy, or if you can buy it, is in an area you'll have peace of mind. And Cameco is really the bellwether. There are others that are up and coming producers, and there's some great exploration companies. But I think it's best to own several of them. Don't try to focus. If you can only own one, then I would own Cameco. Of course, I would look at if you just love uranium, then you got to look at the Sprott uranium as a way to do it. And let me just go back on one thing that I think is important for your viewers to know about gold. The two biggest fundamentals for gold right now is one, unheard of central bank buying. It's through the roof. They're not buying it for speculation. They're buying it for something much bigger than speculation. A preparedness for gold back something, a peak in the dollar, a move away from whatever it is, them buying it and buying it aggressively, whether it's one big central bank, it looks like it's more than that. That's the number one bullish factor. But a factor that people don't talk about, and you had to be around for a lot of years or else you wouldn't know this. For a lot of years, the paper market was manipulated. Now, 20 or 30 years ago, when you said, hey, gold's manipulated, oh, you're a tinfoil hat guy. You're one of those crazy conspiracy people. But we've had enough people convicted now in courts that were manipulating that market to say it was manipulated. Well, it was manipulated because most of the paper trading took place in London and New York. And that's where those who did that operated from. But two things have caused them to ease up doing that. One, well, they've seen people convicted now. It's not a free ride anymore. So they're a little concerned about doing it. And two, paper trading of gold has moved to the Far East. And there, gold is more of a universal way. It's a way of life. The financial industry in the US still treats gold like kryptonite. They don't want to get near it. Okay. So those two factors are very, very bullish for the gold market. And then what you spoke about. That's why until either the central banks ease up or suddenly the paper market starts to be manipulated in Asia, which I don't think it will be, I don't see any reason why gold can't make a new all-time high. So I'd like to leave you with, because you're a hardworking young man that's trying to do a good job, talking about finances and all. It's a lot tougher than buy low and sell high. And you wouldn't know that by the financial commercials. It's always within a few seconds, those people they show you are they're happy, they're sailing in a sailboat or they're playing with their kids. But it's a lot tougher game. And I think we owe people that knowledge, even though most people don't want to talk about it or are not allowed to talk about it. I'll leave you with this, because that's what happened to me, how I got half famous. Back in 1987, I was in the business only 3 years. I made a forecast about a crash. The firm wanted me to retract and resign. I refused. And then when the crash came the day after, I said, it's going to go back to a new high. And that's where the so-called Wall Street whiz kid was born from. But I will tell you this, the Archangel Gabriel can show up at most market strategists' homes. And they could be convinced when they say, God sent me to tell you the market's going to crash. If they go down to their office, they'll never be allowed to speak about that publicly. Just won't. Just not a way of business going to be conducted. So we learned last year, the lesson for last year is investing is a two-way street. It's not a one-way street. It's a two-way street. And sometimes it's a traffic circle. And boy, if you can remember the first time you approached the traffic circle, how nervous you were. That's what happened to a lot of people last year. Sorry for going on, but I don't get a chance normally to say that. And you've been kind enough to allow me. So
No, I love hearing that because it is true. What a lot of people struggle with is just the emotional roller coaster of the stocks are down and they don't know what to do with it, but you're coming out and talking about that. And people do need to get used to the roller coaster and the ups and downs too. Because
including the professionals who, two-thirds of financial advisors have only been in the business 10 years or less, or a large, I forget what the portion is. So they really didn't have the experience. And it's hard, when you don't have experience, you don't know what something else is like. And that's what's happened. And of course, they're trained and they're also encouraged to talk about, well, it always comes back. Well, remember this, there were periods where the Dow went down and didn't recover for 27 years. So it's a lot different market, but people are still pretty well the same. We can go to a point where markets don't go up for more than 6 or 12 months. And that's what I think people should prepare for.
good stuff. Well, thanks for coming on and guiding people through this and sharing your advice. Where can people go to learn more from you? And if you have anything final to say, please do.
Well, there's two places. PeterGrandich.com is where the blog. I am now back on Twitter because it's a good place to be back on. We learned how bad Twitter really was by Musk taking it over. So I'm at Peter Grandich there. And I'll close on this. You can tell I've already shared. It hasn't been easy. Things are very, very tough. I think things are unfortunately going to stay tough for people. And there are a lot of people that aren't in the luxurious position of people that have discretionary income and things. But the model that I have, what I share with people if they're willing to listen, is less is more. As much as the world told us for a lot of years when markets and everything were going crazy, and we turn on the TV and there's these rich families and they're showing you flying private planes and all. That's not the real life. The real life for most people is a struggle. And less is more is an attitude I think can best serve people, whether they're spiritually led or not.
This discussion is for informational purposes only. Please consult a certified financial planner when making any decisions about investing. And do your own research before making any decisions. Investments are risky, and you can lose lots of money in them.